Today, the Fed has started its first two-day FOMC meeting in 2021. The results of the meeting will be disclosed on Wednesday. However, traders have already taken the wait-and-see approach. Today, the UK has published its labour market data. The figures significantly exceeded the forecast. However, the pound sterling dropped after the publication. Importantly, the UK unemployment rate advanced to 5% from 4.9%, and analysts had expected a rise to 5.1%. At the same time, the UK average earnings data caused a lot of concerns. The report points to the deterioration of the UK's economic situation. In fact, the figures are positive. The indicator advanced to 3.6% from 2.8%. However, the simultaneous rise in the average earnings and unemployment rate proves that people with the smallest income are losing their jobs. In other words, the financial situation of the most vulnerable part of citizens is getting only worse. Notably, such a group of people forms the largest collective consumer that shapes the national economic condition. In fact, all this may result in a slump in consumer activity. It means that retail sales and volumes of loans, including mortgage ones, may decline in the near future. Such problems may pose significant risks to the UK economic recovery. The current situation is alarming, especially with the British business discontent with the trade agreement with the European Union. On the trading chart, we can see that the pound-dollar pair hit the resistance level once again. This level is located near the local high of the mid-term uptrend. As usual, the price dropped amid a smaller volume of long positions. After the publication of the statistical data, the pound sterling slid to 1.3622, the low locked on January 20. The quote is still hovering near the local high of the midterm trend, thus pointing to significant overbought conditions. If the price fixes below 1.3610, it may decline to 1.3530 and 1.3460. If the pound-dollar pair consolidates above 1.3750 on the daily chart, it may rise even higher. Let's take a look at the euro-dollar pair. After its Friday's stagnation between the levels of 1.2150 and 1.2190, the pair broke the lower limit of the range. On the chart, we can see that the pair reached the support level of 1.2110, bounced, and then got stuck. If the pair fixes below 1.2110, it will resume falling towards the levels of 1.2080 and 2060. According to the alternative scenario, the price may begin fluctuating between the levels of 1.2130 and 2170, repeating its previous dynamics. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.